Oh, Jeremy Lafifi is gonna be happy with me. Hey, hey, hey. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And I officially have decided to go all in on a stock this Monday. That's right, ladies and gentlemen. I'm buying a LaFufu stock. Woo! Psych! All his stocks are still trash. But I actually am going to buy a stock on Monday. Now, remember, ladies and gentlemen, number one, 95% of my portfolio is in the Vanguard Total World Stock Market Index ETF. And I dedicate 5% of my portfolio for fun. So if I buy this stock and then it goes down and it goes to zero, oh well. Now, how much money am I going to put into this stock, ladies and gentlemen? Well, I believe it's in very good value territory, this mystery stock. So I'm going to start off by putting $500 in there. And if it continues to drop, I may build a position, a massive throbbing position of $1,500 of cost basis. That's right, ladies and gentlemen. Now, what is this stock? And before I say this, you need to do your own freaking research, okay? If you go buy this stock and go YOLO into it, and then you lose all your money, that's your freaking problem. You should be maxing your tax advantage accounts and buying Total World Stock Market Index funds. I'm putting $500 into this stock. $500. That's nothing to me, okay? But it's fun, and I like looking at it. Now, what stock could this be? You guys got it right. I'm buying $500 of Intel. So let's go check out Intel My Pinto. Intel My Pinto. Intel My Pinto. Let me pull up Robin's stock real quick. I should have had that planned. But I know I'm an idiot. I'm a terrible YouTuber. So here's Intel My Pinto, okay? What does Intel do? They make freaking computer products and technologies, computer chips. So this is a massive company. It's got a $160 billion market cap. PE ratio of 6.52, if you can trust freaking Robinhood. A dividend yield of 3.64. I am not buying this for the dividend yield. As a matter of fact, I hate dividend yields. I think dividends are trash. That's just something that I'm going to have to deal with and pay a little bit of taxes on because I don't have any spare change in my tax advantage accounts. So this will be bought probably in Robinhood. But I'm not buying it for that. Now, Intel has been getting crushed, okay? It's down 31% over the past year. And you look over the past 5 years, it's basically flat. Now, this chart does not include reinvested dividends. So you would have had a higher return than 10%. But look at Intel, okay? It had a low in 2017 of $33. $33. And then I've noticed it tends to have these run-ups. You know, it dips and then it runs up. And then it dips and then it runs up. And then it dips and it runs up. So now, if you look where Intel's trading, it's at $39 in June of 2022. This stock is cheap. Now, is it cheap because I'm looking at it and it went down? No, I actually plugged in some numbers into a model, and I actually try to be a little bit more specific in my model. I usually don't do this, but I try to be more specific. And I think for a 15% return, Intel is probably a buy, in my opinion, at $35. So let's go check out the highlights first real quick. Where are the highlights? So Intel released this Intel Highlights 2022 and long-term growth strategy. Now, this is the management talking to you. So at the end of the day, you can't necessarily trust what they're saying, but you can kind of listen to see what they're doing and kind of base your assumptions based on out of that. So here's the CEO or the CEO. The continued proliferation of technology is driving sustained long-term demand for semiconductors. That's true. Creating a $1 trillion market opportunity by 2030. Semiconductors aren't going away, okay? We outlined our strategy and roadmap for accelerating to 10 to 12% year-over-year growth by 2026. 10 to 12%. Do I have that in my model? Absolutely not. And the market doesn't either, okay? So what Intel's trying to do is, they're doing a couple things. So number one, they're looking into building new factories, okay? Infrastructure agreements. They're exploring innovative ways to optimize its investments in new fab projects. They announced a memorandum of understanding with Brookfield Asset Management one of the largest global investors in real estates. Well, they will explore project finance options to help build new Intel manufacturing sites and certain related renewable power opportunities. What does this mean? Well, their free cash flow is going to suck, okay? Because part of your free cash flow is capital expenditures. If they're building new factories, they're going to be spending a lot of freaking money on capital expenditures. And the rest of this is freaking garbage. Okay, smart capacity, government incentives, customer commitments. But it's interesting because they are building more factories and they're aiming to increase their revenue, which their revenue will increase if they're building new freaking factories. As a matter of fact, I hope they cut their freaking dividend. Okay. Now, long term, like I said, they want 10 to 12% year over year revenue growth. That's beasting. Okay. For what they're doing right now, I think they've had negative revenue growth this past year. 10 to 12%. If they can achieve that, this stock will be a banger. Okay. Gross margin, they want 54 to 58%. Operating expense, okay, where's their freaking, let's see what their bottom line profit is projected to be. So they want a bottom line profit between 31% and 29%. That's pretty freaking good. So in my model, I have their profit being 23%, I believe, which is it's insanely conservative. Now, let's go look at some of their financials. So we could see Intel's had a rough time, okay? They have had revenue growth. If you look over the past, 5 or 6 years, 7%, 5%, 12%, 1%, 8%, 1%. I just think they're going through a rough patch, okay? This is a huge company, and I don't think they're going to go down without a fight. So to potentially see them start to grow their revenues at some point in the future, 1% might be low, especially if they're freaking, they actually build those new factories. We look at their gross profit. Where is their gross? So their gross profit, they're saying is 55, 56, 58, 61, 62. So they've had declining gross margins year over year. That's scary, right? Look at their profit margin, 25, 26, 29, 29, 15, 17, 20, 20, 18. So I use 23%. Now, if you want to be ultra conservative, you could say their profit margin is going to dip down to 15, 17, 20. You could do that. I don't think it's going to be that bad. And then we can also see their free cash flow margin has had a massive decline, probably because they're doing a lot of capital expenditures. But this is a very profitable, large corporation, and they're not going to go down without a fight. And for a small speculative investment, I could totally see this paying off at some point in the future. So I pulled up my model and I said, okay, I'm going to put some numbers in here. So I said trailing 12-month revenue is $77.7 billion. So I have that there. Current shares outstanding, I said I used a diluted number, 4.1 billion right there. Discount rate. So I have 12% in here right now. That's roughly what the stock's trading at. It's $39. You can see in the yellow. So if these assumptions are correct, this is priced in to receive a 12% rate of return. Revenue, my avenue. So you can ignore the revenue, my avenue. Because what I did is for revenue, I actually manually plugged in the numbers. So I said 1 year from now, their revenue will be flat. You can see it's the same revenue. Then I said the second year from now, they're going to grow their revenue at 1%. So you see we go from 77.7 to 78.4. Then 2%, then 3% growth, then 4% growth. So you look at this, and these are extremely conservative revenue growth assumptions. If they can get it up to 10, 12%, you're going to see insane appreciation in this stock. But I would super conservative. 0, 1, 2, 3, 4. I mean, this isn't obviously, super in depth, but that's highly, highly conservative. Because instead of putting in 3% revenue growth every single year, I mean, sometimes it's better to try to be more specific in the revenue assumptions. I said profit margin, 23%. Okay, we can even do 20, see what that would be. So if they have a 20% profit margin, they're priced in for roughly 8% return, which is probably going to beat the S&P 500. Like there's so much potential with this investment. PE at disposition. Well, if they start growing their revenues again, their PE, 8 is ultra conservative. But if they have growing revenues and decent profits, their PE is going to be probably higher than 8. If you use the market's historical average of 15, screaming buy all freaking day. But, I used 8. And then I said they had a little bit of share buybacks. Maybe we could even say it's 0 because, they're doing capital expenditures. So you look at this, and even though it's a dying company, and its revenue I projected to be absolute freaking trash, it's still a pretty good buy. I mean, 12%, 11%, that's a pretty decent return. So if Intel can even pull off a portion of what they intend to do here with these hot, decent gross margins, operating expense, and revenue growth projections, I mean, this stock could freaking beast. And you go look at this, and I'm not a technical analysis guy, but I look at this and I say, okay, this company, it sells off and then it has this massive run, and then it sells off and then it has this massive run. Look where it's at. I mean, look how bad this stock has been freaking butchered. Okay, they're like doom and gloom on Intel. But I look and I'm like, okay, it's at 39. It could potentially keep dropping. I mean, I'm not going to dispute that, but I can start nibbling, as Capital Mindset says. And then if it drops to like 35, 32, maybe that's when I put in an extra $500 or $1,000. But if it has another run like this, I mean, holy freaking crap, man, you could 2x pretty easily. I'm not saying that's my plan, but if it did have a massive run, I'd probably sell out of it. But I'm actually pretty confident in this investment. So I looked at this before and I was like, well, the revenue's declining and blah, 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 blah. But what I didn't factor in was it's still going to give you a very, very decent return. Now, for a 15% return using these assumptions, $34. I mean, I think it's a great deal. So my downside is maybe, you never know what the downside is. It could be way worse. But we've eliminated so much risk with how much this stock has been getting wrecked and all the negative sentiment that I don't think I'm going to lose too much money on this stock. We'll see. But just looking at this chart, I mean, it's like, it's probably not a bad deal. And especially with what they're going to do, I think, there's a potential to make a lot of money here. Or, well, not a lot of money, but I mean, if I 2x, if I went from $1,500 to $3,000, I'm happy with that. That's a freaking IRA contribution right there, But like I'm saying, you guys don't buy Intel because I'm putting $500 into it. I am not going all in on Intel. I am all in on VT. This is for fun. All right, you got to have moderation. Let's look at some comments here. My financial advisor. I don't want to call myself a financial advisor because I hate financial advisors. Jerry would be like, my biggest hater bought Ttcf. Wasn't that some great clickbait, though? Did you guys like that? I would never buy that freaking trash. Ever. But yeah, Julius, props to Julius for calling out what I'm buying. I mean, it was probably obvious because I was posting about it. Probably pretty common sense to guess what I was going to buy. But like I said, I'm not going all in. Hey, Strong, when you setting up the green screen with LaFouche's Crush? So I actually canceled the shipment for my green screen because this new job that I get, they gave me a $500 technology credit to spend on, peripheries. So I can use that to buy my green screen and get some stuff both for my work and I can double its YouTube stuff. So I actually canceled the shipment because I can have somebody else pay for it. Not all the stocks are trash. He actually bought a decent buy with Meta. I agree. I think Meta is probably a good deal, but it's already pretty high up there at VT. I mean, I'm not interested. Don't you ever put a shirt on? When I go outside, I do. Don't click nothing. Don't smash and just sign up for my Patreon, bro. He's referring to Tom Nash there. Because Intel has declining revs, I don't see much growth. I see a huge margin of safety. I start a position at 35. But, I mean, we're almost there. That's what I'm saying. Like, I'm going to put $500 in now at 39. Okay, it drops to 35. I put in an extra $500 or $1,000. I'm still doing pretty good. You know what I'm saying? You just got to be patient sometimes. He's finna to day trade it. No, I'm not going to day trade this. If this company runs, though, I mean, just look at the chart, man. Like, if this company runs again, like some kind of positive news comes out and they do have revenue growth or something, I mean, you could potentially make some money. Okay, that's LaFufu. My shirtless financial advisor is YOLOing into individual stocks. I'm going all in Intel, baby. All in. I just cashed out my kids' college fund. I mortgaged my house. I sold my butt. Whatever I have to do to just put all my money into one stock because it's the future, bro. Now, imagine buying Intel, which is highly profitable, going through some tough times, but, part of an industry that's going to be needed in the future. And contrast that to Tattooed Chef. Like, the guy's obviously an idiot, Okay. Boom, 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 boom. Boom, 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 boom. Thank you for the £4.20. I actually love the pound. Like, there's something about the pound. I've actually been to England a couple times. I love the notes. I love the little coins. I love it, man. I feel wealthy when I hold a pound in my hand. I don't know. There's something intangible about the pound that makes me feel good. Why is this considered speculative if they clearly make money? I get we make assumption this is not Tattooed Chef. Should this be considered invest? Yeah, whatever. I always say the 5% of my portfolio, I always call it a speculative part of my portfolio. Because at the end of the day, I'm an index investor. I'm not an individual stock picker. But yes, this is definitely considered value investing. All right. You could do way more research if you want. You should. But I think it's at a good valuation for an investing. But I always, maybe I shouldn't call it that, but my 5%, I just call it my speculative part of my portfolio. All right, let's see. I think having fabs will be extremely valuable in the future, even more than however I believe. Taiwan Semiconductor is better at producing high-end chips, and they are building a lot too. Yeah, I mean, I'm not saying Intel is going to be a freaking beast, but I think you can make some money off this. Fisting Intel under 30. Yeah, I don't know if it's going to fall under 30. I mean, it could. You never know. But I think starting a position where it's at right now is not bad. But I totally acknowledge it has room to drop. I totally acknowledge that. So if it drops to 35, 34, 32, average down, Another great Intel has deep ties to the U.S. government. Yeah. Intel leaps. I don't do options. I mean, maybe I'll look into it. You can tell if they're expensive or not, and that probably gives you an indication of where people think the stock's going to go. Jeremy bought Fartbox. Yeah, I know he did. I mean, it's not the worst company in the world, but I mean, the whole cloud thing, it's just, I don't know. I mean, there's so much competition in that. And I don't know. I mean, he might make some money. I mean, it's one of his probably better buys, in my opinion. I mean, it's unprofitable and it's diluting, but they have good free cash flow because they have stock compensation expense. But you know what? If you want to be diluted and maybe make some money, you go right ahead. Baba to 1,000 by 2025. And whoo, that would be nice, but I don't know. I don't know about that, guys. Okay. Well, love your technical analysis. I don't do technical analysis. That was the most idiotic technical analysis ever done in human history. It's like, okay, I see it goes up and down, and now it's been down, so it can maybe go back up. But that's not why I'm buying the stock. I'm just showing you that it's the potential for that to happen could happen. Review truck stop stock TA. I'll check it out. All right, guys, that's it. I'm saying, don't go all in the stock. I'm putting $500 into it. Okay. And if it continues to dump, more maximum, I'll have $1,500 cost basis. And I'll continue to buy VT. I mean, I still have my automatic contribution to VT. But since I'm hustling so much, I have extra money coming in. I can buy individual stocks every once in a while. But all right, guys, talk to you later. Cheers.